Good afternoon, crypto enthusiasts, to another technical analysis on our channel, where we're going to talk about the current situation, first of all on the traditional markets, and obviously most important on the crypto and blockchain markets, where we're going to currently do a technical analysis mostly on Bitcoin, but it's going to be very much connected to the current bull cycle and how we're expecting the same to continue. Now, first and most important, because yesterday we had a new rate cut from the Federal Reserve of America. This practically has had a very nice effect on the markets. Yesterday we have witnessed new all-time high, and very important, we have witnessed downturn in the DXY index. Now, why is this so important? Because practically finally after so many days we have, sorry, just a moment, let's zoom it in. We have finally witnessed a downturn in the DXY index. I'm gonna go to the bigger time frame because here is more important to actually analyze this chart. Now, what we can see is currently this accumulation area developing after the first fall. That was after DXY have managed to get its local all-time high for this bull market on the in October 2022. So practically what we can see is a standard bear flag accumulation pattern, where literally we can see the pole of the flag itself, the flag, and then the pole down. This is the same size, which is practically showing us that the target that we have for the DXY correction downwards is somewhere around 93 points. Now, as you can see, generally the whole pattern of the dollar since the beginning of the 20s, here we go, the start is 2008, we can see that it's practically in this macro channel that is currently in. And obviously what we can see is that in all this practically development of the price of the dollar, it has been in a bull market on the upper part of this channel and bear market on the lower part of this channel, which if we use to see the macro development of bull and bear markets of DXY compared to Bitcoin, we can see a very interesting thing. What we can see is that every time that the DXY index was in a bull market, we can see that the this purple line, so actually, yes, this purple line, which is currently the S&P 500, and we're going to change this to orange so we know that it's Bitcoin, and the orange line were practically in bear market. This is the bear market of 2022, right? Then what we're expecting previously, when the DXY index went in correction backwards down, we saw a bull market in 2021 for Bitcoin and for the S&P 500. Going backwards, we can see the same result constantly. When the DXY was falling, we had a bull market in 2017, bull market for S&P 500 in 2017 as well. When the DXY was getting higher, we have a stagnation, although it still was a bull market potentially for the S&P 500 index. But as we can see, Bitcoin was in an effective bear market. So what does this show us is that every time that we have a monetary policy that is negative for the DXY index, is positive for everything else. In this case, including Bitcoin and the traditional markets, where we obviously take S&P 500 for example. So the momentum, as you've seen in our previous video where we were discussing practically the policy of the Federal Reserve, the momentum currently is in lowering the interest rates of the Federal Reserve, which in kind will lower the price, although in this case is the value of the dollar, right? Because not only that the lowering of the interest rate is one part of the policy, the second part of the same policy is quantitative easing, which means printing more money to boost the economy, which in kind more money in the system, less the dollar has value. When the dollar devalues, we have a lowering DXY index, and in this case, everything else goes upwards. So currently, we have a situation where the Federal Reserve has just initiated this process of lowering the interest rate. Just for you to understand how it works, we're going to put Fed funds. This is the index for the interest rates of the Federal Reserve. We can see that every time that the Federal Reserve has lowered its rate, the DXY has lost in value. The other way around, when the interest rates were raised, the DXY was pumping in value. Same here. We had a situation where we had a massive raise of interest rates until 5.5% on the Federal Reserve, which made practically bull market of DXY that we haven't seen since the 2010. So as you can see, this is actually a massive indicator and let's say source of the power and value of the DXY index. So since we just started a cycle of lowering the Federal Reserve index, in this case the interest rate, we are expecting lowering of the value of DXY. And obviously, what else are we getting in the same time that we're expecting this? Since the policy of the Federal Reserve has changed, we're witnessing a bull market in the S&P 500, where we are currently in a new all-time high. The same thing goes for the Nasdaq. As we can see, the NDQ Nasdaq index, new all-time high. And now, very interestingly, over here we have the Russell 2000, which is similar to the total tree of the altcoins. Why am I saying this? Because Russell 2000 contains the indexes of the top 3,000 companies in America, but from the first 1,000 to the 3,000 place. So the lower cap of these top 3,000 companies, which means in this case that this represents practically the same difference between the Bitcoin and altcoin market cap. So as we can see, the Russell 2000 still haven't reached his previous all-time high, but it's on time to do it. Like literally, as you can see, it's currently traveling exactly there to beat its previous all-time high, which actually shows us that we are currently on the same track with the bull market of the cryptocurrencies, where Bitcoin is already in new all-time high, and we're expecting the same to happen with the altcoins. Additionally, we can see that the fear greed index is in the 60s range, which is a greed range, and we are practically starting another run for extreme greed, which I'm expecting soon, since after we have started this, let's say, range of getting prices of indexes and stocks higher. Obviously, we are in a very good position for the next bull market in traditional and in crypto industry. As we can see, same goes for the crypto industry. The current fear and greed index is 59, and just 1 week ago we had 44. So we've jumped from fear to greed in just 1 week after this massive catalyst that we had. That's the presidential elections where Trump was elected, which we already discussed and explained. Please see the first video on our channel, which was this Monday, where we explained exactly what we're expecting of the Trump presidency and all the promises he have made for the crypto industry. So I believe that you're gonna find that video quite useful. Now, next, what I want to show you is what we were discussing regarding the price of Bitcoin. If you remember, in our current analysis, when we showed last time, we said that just above the previous all-time high, around 74,000, we are entering a short squeeze zone, because we have a lot of positions that are practically posted with its stop loss above the short squeeze zone of 74,000. That's why I'm expecting that we are going to have massive short squeeze that are helping us to continue growing in price to 80,000 at least, because a lot of people are still trying to short the market, and there is also positions that are open since the time that we previously were as high as 74,000 around March this year, which now are practically being closed on purpose, obviously, by the market itself when the price reaches their stop loss. Now, as we can see, we have experienced this exactly what we already mentioned, and we have witnessed 426 million short squeeze or liquidation of short positions on the 6th of November, following by 187 million on the 7th of November, and today we are already at 67 million. So as the price continues to grow, I'm expecting that we are going to be experiencing a lot more short squeeze effect. So additionally, let's not forget, since we are checking on the Bitcoin spot ETF as well, yesterday only BlackRock accumulated $1,120 million worth of Bitcoin. This is only BlackRock, only one day. If we witness what BlackRock has done for the previous month, since the 14th of October, if I remember correctly, they have been accumulating hundreds and hundreds of millions of dollars dollars worth of Bitcoin. As we can see, similarly goes for the other representatives of the Bitcoin spot ETFs as well. Yesterday, Fidelity accumulated 190 million. The rest are not that big, as we can see, but in the last 2 days, since finally we have witnessed that there will be a very pro-crypto candidate in the White House, we can see big amount of interest towards the institutions. On the 6th of November, Fidelity bought 308 million worth of Bitcoin. Bitwise, 100 million. ARK Invest, 127. Even Grayscale, which was the biggest, let's say, downturn in the whole Bitcoin spot ETF until now, has accumulated more than $140 million on 6th of November, just after Trump being elected as president. And we can see that accumulation continues onwards in the institutional level, something that we have never witnessed before. Obviously, since before 11th of January, we didn't have Bitcoin spot ETFs. But why is this so important? Because previous bull markets, we didn't have the institutions to be part of the buying opportunity. Now, not only the whales, which previously were the ones responsible for practically pumping the price of Bitcoin, now the institutions are also part of this bull market, which will make, according to me, a completely different bull market that we've never seen before. You have two extremely large forces competing for one source. In this case, that's Bitcoin, which means this amount of capital eventually will get the price up. The price currently is not going up because most of these, let's say, traditional markets, and obviously in this case, whales, are buying through OTC, over-the-counter services that are provided by the big exchanges. So they do not manipulate the price of the market, since they're not buying straight from the market. They're buying peer-to-peer from another person that wants to sell at the moment. You understand? Anyway, let's go back to the technical analysis at hand. First, we're going to go to a monthly level, because we're doing only macro analysis on a monthly and weekly level, where we can see, first of all, if we change the candles to Heiken-Ashi. Those are special kind of candles that are giving us the trend, the macro trend in general. We can see that every time the Heiken-Ashi candles changed in a trend, we had a practically completely different type of movement in bear and bull. So how do we detect a change in the movement? The candles are getting smaller towards the end of the movement, and we have candles that are smaller than its shadows. These are called shadows, right? So when we have this kind of candles with a small body and very large shadows, we are expecting turn of the, in this case, of the trend. Same situation here. Small body, large shadows, change of trend. Small body, large shadows, change of trend. Small body, large shadows, change of trend. So in this case, we can see that even the most massive swings, like the summer lull of 2021, like the practically start of the bull market in 2020 and 2029, this is just the pandemic, so that's why we had this situation, is actually represented by the change of the movement of the Heiken-Ashi candles, which are very good indicator on large time intervals. We can see that the similar situation is on a weekly level as well. We have had a change in direction, although it was very short, as we can see, it's just one candle, but generally this macro trend has already changed, and we have started in a upwards trajectory of Heiken-Ashi candles. Now, if we go back to the monthly level on a normal candles strategy, what we can see is, first of all, that finally we have finished this correction down to the practically these are middle range waves that are coming from the market cipher A indicator that we have, which are generally in macro levels like this, the first sign that we have from proper support for the next bull market. Why are we saying this? We can see previously the same situation. Once we have managed to go above this median trend lines from the market cipher, we are always retesting them, and we're starting the next bull market. Once we have managed to get above, this is exactly what we did. We retested them, and we are going on the next bull market. Same situation we can see over here with this macro trend that we were discussing about. This is, as we said, the flag formation again, but we're not going to go into detail now. That's a formation that we're going to inspect on a weekly level. Again, changing trend on the MACD, the signal wave has crossed the base wave, the baseline, and now currently we have this dot that is showing us start of upwards movement because we have change in trend. And currently the RSI and stock RSI are on the 70 level. Above this they are considered to be overbought. But let's not forget that in previous cases on the same situation we have had overbought levels from RSI and stock RSI since October 2020 to, look at this, May 2021, which means more than in this case 6-7 months the indicators were overbought. They were above the normal levels, and practically this is normal when we're talking about this kind of a large time frame, like the monthly time frame, on a macro level when we're expecting blow off practically movement towards the next bull market. On the weekly level, what we can also see is exactly the same situation that we're discussing. We have this macro formation of a bull flag, where we have had the pole, then we have had the accumulation in this flag formation, and now we're expecting the finalization of this formation to end around 100,000, which is practically everybody is expecting this price since the bull market in 2021, because there was a lot of speculation. Everybody was expecting to be reached then, but obviously now it's a lot more plausible that this is going to happen. As we can see, again, same situation, we have had finally turned the median range of the market cipher indicator upwards, and as practically support for the movement of Bitcoin. Unfortunately, we're on the top part of the Bollinger Band, but again, historically, same situation like the RSI and stock RSI indicators. What we can see is it happens sometimes that the price gets out and stays out for like 2-3 candles before returning back inside the Bollinger Band. So in this case, this is again one of those possibilities that we're going to have a very explosive movement upwards, since we have a very good momentum, and we're going to show that finally the retail sector have woken up after 2 days of all-time highs in the Bitcoin price, and obviously now is interested in buying. This is the first chart that we are going to compare. This is the second one, where we have let's say the MACD like an indicator a little bit separated, so we can see better what it's showing us. This is on a weekly level, which is this chart I prefer looking at on the weekly level because of the bull market support band and the MACD indicator. As we can see, we have finally experienced a crossing of the signal above the baseline, which means we are in this case practically starting a trend, like in this previous situation, where we have had a deep wave below zero, moving upwards up above the zero in the next movement, which lasted from October to March last year to 2024 March, right? Now we have had even deeper wave that was finished, and now we're finally expecting for this second part of the wave to continue upwards. As we can see, MACD is showing us that now is the time. The same as the median lines of the market cipher A, now we can experience as well the bull market support band, which also have turned from bearish to bullish with the crossing of the signal above the baseline, and we're starting practically upwards trajectory movement again, because historically every time we have bounced off of the bull market support band after a bear market, we have started a bull market, right? And it's practically the main support for the bull market. Same situation 2015, 2016, once we have managed to cross above the bull market support band and retested it, it have been a support for the whole bull market onwards to 20,000, right? So in this situation, what we can experience here, same situation, we have managed to cross above the bull market support band, retested it, and we're expecting for it to practically be support from this point onwards upwards. Also, we have had the two golden crosses experienced in January and September of 2024. This is a normal golden cross where we have the 50 moving average crossing the 200 moving average, week average obviously, and this is a golden cross that we have never experienced before, where we have had the 100 weekly average movement crossing the 200 weekly average movement, which is practically a very, very interesting and very, very massive indicator for bullish movement upwards. Now, Next, what I want to show you is the macro level of the Wyckoff accumulation and distribution pattern, where we have on the previous channel, obviously on the channel that I'm still holding in the Macedonian language, we are working tirelessly on these structures, where we are practically trying to determine when we're in an accumulation phase and distribution phase to the last detail. This we have done for the last practically 1 year, and if you go to a daily level, you can see that literally we have been experiencing and trying to find all the points of Wyckoff accumulation, which we can see that we have managed to find, even determine the time that it's going to start moving upwards, to practically come to the point which is the best part, which is the mark up period, where we have this kind of normal 30 to 40% corrections on the upward trajectory to the Wyckoff distribution, which I'm expecting to be above 100,000, even more, but 100,000 is a, let's say, conservative target for me for this bull market. So we can see a normal 32% correction in this time frame from March to October, where we are practically finishing this, let's say, structure, and we're currently on our way upwards towards the next bull market. So as you can see, when the time comes for us to actually reach this upper echelon of the price above 100,000, we'll see how it's going to look like. We're going to start determining the details of the distribution of Wyckoff and starting to eliminate our portfolio and sell what we have accumulated in the lowest part of this bull market. Now, another thing I want to point out is the similarities of the different just a moment, of the different Bitcoin cycles. Why am I saying this? We can see that the similarities of the Bitcoin cycle are very, very structural when we're doing a macro analysis. As we can see, we have shown previously, we can see that every practically major point on the Bitcoin chart has always been in the exact 4-year algorithmic preset time frame. Why am I saying this? If we look at it backwards, we can see very interestingly that from the previous high to the next high of Bitcoin, we have 49 bars, which means it's exactly 4 years and a month. So nothing is exact, obviously, but we have the same from the second to the third top, which is 47. Again, 1 or minus or 1 plus is 48 months, which is exactly the Bitcoin cycle of halving. That's the exact time. From the previous bottom to the bottom of the 2019 bear market, 47 bars, 4 years. From the 2018-19 bear market to the ending of the bear market of 2022, 47 bars. So, miracle, right? And in the same time, from the bottom, we can count that 35 months after the bottom, we have a top. 35 months after the bottom, we have a top. 35 months after the bottom, we're expecting to have top somewhere around October to November next year. So we can see that the cycle so far have not failed us. And look at this magic now. Let's see where we are currently after the halving cycle, which is the yellow line. We are 7 months into the halving of this cycle. We are currently just experiencing breaking the previous all-time high. This is a freak accident that we had practically all-time high before the halving. That was just because we had a very huge interest coming from the institutions and their first entrance of the market. But if we compare this to the previous cycles, let's see where the cycle was 7 months into it. So this is the 7th candle. Just let me see, 7th candle. Look at this. So the 7th candle is exactly the moment when it broke above the previous all-time high of the previous cycle. Exactly as we are right now. Let's see where it was on the previous bull market. The first practically bull market that matters in 2017. 7th bar. Where is it? Exactly the price movement that broke the previous all-time high. Which shows us that currently the Bitcoin cycle is amazing indicator to follow. As you can see, all these practically previous cycles are very similar to each other. They're never identical, but they're very similar to each other. Another similarity we can actually also see is the similarity of this channel that we have since the beginning of the price of Bitcoin, where we see that every time that the price have managed to reach the upper high levels of this channel, it practically ended with its bull market. And same way goes down. When it reached the lower part, it actually ended with the bear market of that cycle. Another thing we can actually see is that this is a very similar cycle to the one that we had in 2017. And if we put it, believe it or not, watch this now. If we practically copy it one from another, from the actual bottom to the actual top, and we practically overlay this on the current cycle from its actual bottom, as you can see over here, we are going to match the actual bottom. We can see that we are expecting a similar movement to the upper part of this bull trend to practically end this bull cycle. Although, don't forget, the ending of this price predicts $1 million worth of Bitcoin. That's too big if you ask me. I don't think we're going to see something like this bull market, but just to see that technically these two bull markets are very similar. And also we can see that the price movement of the previous bull market is predicting Bitcoin next top to come around October 2025. Now we're going to see if that's going to be the truth. But anyway, this is one of those major indicators we are following, this macro channel we are following since I have been working on crypto. This is in 2017. Now, we're going to go into something interesting. This is the statistics of how the years after the halving have followed. We're going to see first 2016, yes, for Bitcoin. So 2016 on a quarterly level, right after the halving in 2016 of the third quarter of 2016, have managed to do 58% in the last quarter of that year when the halving occurred. We can see that the next year was a full-blown bull market. Same situation goes for 2020. We can see that the third and fourth quarter, especially fourth quarter, which was right after the halving, which occurred in the third quarter of 2020, we have had a massive jump of 168% for these 3 months, October, November, and December in 2021. Now, we did have some FUD over here. This was the China banning crypto, Elon Musk coming out with this stupid statement that he's not going to sell Tesla anymore for Bitcoin because Bitcoin is not green enough. But in the same time, we can see that this year also have had a very successful bull market, even without the correction that we had in the middle of the cycle, which have produced two tops. Anyway, we can see that this is what we're expecting now. We're in the fourth quarter of the year of halving, and we're expecting one more year of additional gains. Obviously, we're going to face it together. Same we can see here. This is practically a chart which resembles the halving periods. This is the green period, which actually shows us where the price was in the last Bitcoin halving to the current price. So we can see how it was looking currently in comparison this cycle to the previous cycle. So we can see that the start of the movement upwards to this banana period of the price of movement is literally right now. So we are currently in that moment where we're expecting the price to continuously go upwards in a wild manner. And obviously we can see the same here where we overlay all the cycles so far. This is the fourth cycle. From the moment of halving onwards, we can see that currently we are exactly there, before the start of the movement upwards into the next bull market and all-time high. On top of that, we have to mention that currently we are completely into altcoins. That's something that I need you to know on our channel. We're going to do soon update of the portfolio, so we're going to show exactly what we have and which percentages, obviously. But in the same time, as we can see, currently we're in a position where we're in a Bitcoin season with index of 37 on the alt season index. What does that mean? It means that currently the Bitcoin is overperforming the prices of the, as we can see, on 90 days period. It's on the top part of overperforming the rest of the market, as we can see over here. But this soon I'm expecting to change, especially since alt season is upon us. and we will witness something similar to the October to March movement of all the altcoins very soon. Why am I saying this? Because the retail sector is finally waking up. The altcoin season is always starting when the retail sector comes back in the game. 0.9 out of 1. That's like 90% out of 100 when it was top subject on the net. As you can see here, taken from Twitter, Reddit, and Bitcoin Talk generally, according to search engines. We can see that currently there is a massive interest in the retail sector about Bitcoin. This we can also see on the Google Trends. This is a special indicator we can find very easy on Google Trends. Just write Bitcoin, put worldwide and 2004 since they started until now. What we can see a massive jump where in October this index was only 19 out of 100. This is the top, practically top amount of people searching for Bitcoin in the top part of the bull market of 2017. Now we have jumped from the end of October when it was 19 to, believe it or not, 32, whole 13% of population that was previously looking for Bitcoin is coming back to search what is Bitcoin on Google, which means the interest of the retail sector is finally coming back into play. Obviously, comparison to the last part that we have from this bull market, we can see that when the price of Bitcoin was 74,000, obviously we had even higher interest for Bitcoin, which was 42. So the retail sector, unfortunately, always comes at the end. And when it comes, practically, it's the moment that the prices start going up. And obviously, we are coming to the point that we need to start selling. Unfortunately, that's how the game goes. Also, we can see these two additional indicators which are showing us the same situation. Short-term hodlers, these are people that are holding Bitcoin in a short term. From September, when there were 3,613,000 short-term holders, have jumped to 4,178,000. And we can see in this situation that we have practically experienced 500,000 people accumulating in this period, to the point that we have risen from 3,600,000 to 4,178,000. Same situation we can see in the long term or the long-term hodlers of Bitcoin, where we have risen from 14,800,000 to 16,143,000. So we have had 1.5 million accounts of practically hodling through this period of accumulation. Although we do have experienced a little bit of a downturn, but this is because the price is very high, and most of these people have accumulated since the time Bitcoin was only 15,000. And the last indicator for today is the CBBI indicator, which is very, very good in determining tops and bottoms of a market, which is currently at a value of 70. Now, it contains 10 different indicators, which actually give him a, let's say, index of price range of 0 to 100, where, as you can see, the lowest percentage it had is determined the dips or the actual bottoms of the price of Bitcoin, and the highest it got to practically 100, it determined the highest parts of the price of Bitcoin. As we can see, cycles back, it's very reliant. What we can experience currently is that we are on the way to practically experience the last and the best blow off top of this cycle. If you have liked what we have discussed today, I would advise you to follow our channel. We can see all the information in every of the videos in the description, where you can find our social media and the channel that we are currently working on. Thank you very much, and see you in the next one.